Hello, welcome once again for our second session for explaining VAT impacts on businesses in UAE. My name is Mustafa, and this session is conducted in collaboration with Crest Venture Solutions. Crest Venture Solutions is a consulting company and they provide business solutions specifically based on Microsoft Dynamics platform. For more information about our services, please go through our website provided in description of this video. In our last session, we explained basics for VAT and how does it impact the supply chain cycle. So in this session, our aim is to explain the pre-implementation steps and checklists that companies should take before end of this year to implement VAT. We need to see what impacts VAT will have on your inventory costing. Also, we will focus on what changes are required in your chart of accounts to implement VAT. We will explain accounting treatment for the purchases and sales and how they need to be reported. We'll be going through a small presentation and that will be helpful for the finance managers or accountants out there to understand these impacts. As you know, VAT will be effective in UAE from 1st January 2018, so companies are expected to prepare themselves a few months before end of this year. So first is that they need to understand if their companies and products or services are eligible for VAT. So the registration of VAT is based on your turnover requirements. So there is no such amount of turnover is right now available that we can see what is the turnover requirement, but it is expected that certain turnover requirements will be there. This is important. So certain small businesses, like for example shops, they will not be able to maintain VAT records or do extensive accounting for the VAT, so they can be excluded from the VAT requirements. So there are turnover requirements which are not specifically mentioned. What are the turnover requirements? But once they are there, then the companies will be able to register themselves for VAT. Also, it's not only the turnover requirements, also you need to see if your trading goods or services are eligible for VAT, because certain items, like for example maybe certain necessity items will not be eligible for VAT, and certain luxury items will be eligible. So the trading goods or services need to be eligible. So companies and the finance managers out there need to understand what are the items it is eligible for calculation and accounting for the VAT. As a pre-implementation steps, also you need to understand what are the business documentations that need to be maintained or revised once you are eligible for VAT. Like for example, you need to have certain formats for the invoices to show that you are charging VAT, or a certain purchase order that that is more of a communication to your vendor that okay, the vendor can charge VAT as we are VAT registered. And there are certain documentation, for example retail receipt, customer statement, vendor statement. These are like as an example documentation right now, but they are required to be modified in order to implement VAT. For example, I can give you certain example. For example, invoice. So this is one of the example for the invoice where we can say we have the VAT number available on the invoice, on the invoice screen, and also we can have the VAT percentage on the line level and the amount of VAT which is being charged on the customer on the line level, and then we can have the total amount of VAT that is charged on the head of the invoice. So these kind of changes are being expected on the invoices. We are not sure whether how ministry gonna give us the direction for such changes. Maybe these changes are required to be implemented or maybe optional. So we are not sure. Let's look at the purchase order, how the purchase order can be. So purchase order can be like similar to the invoice. Like for example, we can have VAT on the line level and we can have VAT on the total level. And similarly, we can have the VAT changes on the sales receipt. For example, we can have the VAT on the face of the receipt. For example, in this example, we are seeing output VAT at 4%. Since the end consumer, the final consumer, is the person who is paying the VAT from his pocket, so it is mandatory. It will be mandatory, I believe, that VAT will be required on such receipts. Like for example, you whenever you go to restaurants or whenever you go to buying some clothes, so you have to get the receipt and see how much VAT is charged on a customer. So, revision of external business documentation will be required, and since we are expecting this VAT will be eligible, will be effective in UAE from 1st of January 2018. So these revisions and these changes and modification to the documents will be required a couple of months before 1st of January. One of the important steps in implementing your VAT, you need to communicate to your vendors and customers about your registration. This is very important because your vendor or your customer doesn't know whether you are eligible for VAT or not. So if you are eligible for VAT, that okay, you will start charging them, or you should be charged for VAT. So you need to communicate them about your VAT registration number, and okay, you need to communicate them these are the certain items which are exempted from VAT, and these are the certain items which are eligible for VAT. So you have to communicate, and this communication can only happen when we have certain facts available about the turnover requirements and eligibility for the product. Training is also one of the component which is required to be taken care, because this is the first time when VAT is being implemented in UAE. So um, I'm pretty sure that many of the finance managers would know that how the VAT should be accounted, but some of them, maybe your accountants and who are working in UAE for like maybe like a long period of time of experience, and they have only experience for the GCC, so they might not know how VAT is required to be accounted. So they need to be a training for your finance department, so they should know what are the reporting requirements, what are the audit requirements, how to account for the VAT. So because if you don't do the training, or don't advise them, or you don't have the policies to account for the VAT, you might end up in paying certain fines to the ministry. So it's very important to save those fines, or to be away from those such activities. You have to have the trained staff available in your finance team. The last thing is that your ERP configuration. If you are using any ERP, any of the ERP, like for example, you are using Dynamics AX, GP, Navision, or any other ERP like SAP or Oracle, or any third-party ERP, you have to update your configuration. You have to discuss with your vendor about the requirements, and many of the ERP standard ERPs like Microsoft Dynamics or SAP and Oracle, they come out of box with VAT implications. So you need to discuss with your partner or your vendor like how these configuration will be updated. In our next couple of sessions, we will explain how Microsoft Dynamics AX, GP, and Navision can be updated, and what configurations are required in order to implement VAT for your system. Our next point, our next area of discussion is inventory cost as per IS2. So, inventory cost as per IS2 requires the purchase price, import duties, and irrecoverable taxes, transportation costs, like for example, carriage inwards, freight, handling costs, for example, insurance, or any other cost that is directly attributable to the acquisition of the finished goods. So, what is VAT? VAT is an indirect recoverable tax. Recoverable tax because you claim your tax from your customer, right? It is the end consumer which pays the tax finally. So in that case, as per IS2, you cannot make VAT as a cost component for your inventories. So that means whenever you are purchasing your trading goods, you cannot capitalize your VAT in your inventory account or your inventory cost. So your weighted average cost, or whatever the cost method you're using, should not have the VAT impact. Okay, I believe it's very simple, and you understand like inventory cost cannot be used for the VAT. Changes in chart of accounts. So there are like two accounts need to be introduced. One is input VAT and output VAT. Input VAT is more like your current asset, as you pay VAT when you are procuring goods. So you have to account those taxes in another account, and it will be your asset side, and you can report that amount in your current assets. And whenever you are selling goods to your customer, you can record the amount in output VAT, and that will be your current liability. And definitely, as we explained in our last session, the difference between the input and output. So the difference between your asset account, that is input VAT, and output account, which is current liability. So the difference is required to be paid to the ministry, to your authorities. So let's take an example of accounting for purchases. So here we are purchasing trading goods for 12,000 dirhams, and the goods are applicable for VAT 5%, and vendor is registered for VAT. So when we are procuring and executing this transaction, so you can see the inventory is debited by 12,000, exactly the same amount of the trading goods. And at the same time, I'm recording a liability from a vendor, which is 12,000 credit. In addition to that, I am calculating my VAT, which is 5% of 12,000. So VAT input is 600. And just to for the explanation, your accounts payable is 600, which is same to your vendor. It's not like I'm recording accounts payable. So you pay 12,000 to your vendor and 600 to the authority. It's not like that. When you pay 12,600 to your same vendor where you have purchased your inventory. Okay. And similarly, in terms of sales, like for example, if the same goods, like for example, the goods we have purchased for the 12,000 dirhams in the last slide, we are selling it for 15,000 dirhams. So inventory, which was purchased for 12,000, is being credited for 12,000 because I have sold all of them. And the cost of goods sold is 12,000. It's not 12,600 because I never capitalize my inventory. I never capitalize my VAT in terms of inventory. So my cost of goods sold will remain 12,000. And my sales is 15,000. My account receivable will be 15,000. VAT input, which is my liability, 750, and accounts receivable will be 750. So my total account receivable will be 15,750 from the same customer. So when the customer is settling your invoice, he's required to pay 15,750, not 15,000 only. Okay. So if you're doing the reporting for the period, so we believe that the reporting will be quarterly, and the difference between output and input. So in this case, your output VAT was 750 and your input VAT was 600. So VAT payable for the period would be 150. Also, I would like to raise one point over here, that there's no difference in profitability when VAT will be implemented, because you are not you're not recording your VAT as an expenses. Okay, VAT is not your expense, so there will be no impacts on the profitability. Um, so this are certain notes which we came across before the session, that VAT is not applicable for residential units, but it is applicable for properties with commercial uses. So, like for example, if you are paying rent for the warehouses or you are paying rent for the shops, then there might be applicable for VAT. There is still, I'm not sure about the VAT on fixed asset acquisitions, and they will have the major impact on the investments, like businesses need to take care, because I'm pretty sure VAT does not have the expenses implications, but in terms of investment, it's a cash outflow. You have to, pay cash. But when you purchasing fixed assets, you have a major outflow of cash. So when the VAT is applicable, we need to see how those cash flows will be impacting on the fixed assets. As I said, our next session will be more focused on our ERP side, which we are like, for example, we're gonna see what will be the configuration requirements for Dynamics AX and GP and Navision. So we're gonna explain how how these ERPs require to be configured. For example, what are the vendor groups, what are the customer groups, what are the taxation groups, and how you can avail the reporting from the out-of-box ERP. And since since the VAT is not finalized with the Ministry of Finance, so these sessions will be based on the best available information, and I believe there will be no customization required to implement VAT in UAE. So if you have any questions and comments, please email us, visit our website, please give us a call, and thank you for your time for this video. Thank you. Bye bye.